On this episode of Pennies Going In Raw, are you lonely this Valentine's Day? Well, we got you covered. We're talking about this week in the market, how the swings are doing, and the Algo switch.
Hey, yo, check 1, 2. This is Flavor Flav in the building for the Atlas crew.
Atlas Trading, what the fuck is up?
There are traders, there are prodigies, and then there's legends.
We're up 4%, baby.
No way.
4 fucking percent.
Buy the fucking dip.
Hey, who told me about IDEX?
Like, dude, what the fuck? Like, someone just made, like, a lot more money than me on my trade.
You find out life's this game of pennies.
Did you check the portfolio?
Pennies. The margin for error is so small.
I bet Warren Buffett never did that.
And they out there making money right now off of penny stocks.
Them two guys is putting in work to make y'all rich.
The pennies we need are everywhere around us.
It's time to think big.
Pennies Going In Raw.
Featuring Dan, Deity at Dips.
And Hugh Honey.
Produced by Vinny Strokes, baby.
Welcome back to Pennies Going In Raw. Today is Sunday, February the 14th, aka Valentine's Day. And this episode of Pennies Going In Raw is brought to you by Benzinga. Benzinga is our favorite news scanner. We use it every day when we trade. Benzinga Pro brings you the fastest stock market news and research, alerts, news feeds, stock screeners, chats, and much more, all customizable. Try free for 2 weeks at pro.benzinga.com. But yeah, Hugh, this week we definitely saw a continuation of a crazy market. We saw tons of halts. It seems like low float halters were the theme. We had to change some things in the trades. I mean, I think we always say trade what's in front of you. It doesn't seem like SPACs were really in front of us these past 2 weeks.
No, SPACs definitely weren't. It this was all low float February in its full swing. I mean, we saw things with 500K float. Even FWP, one of the ones from the past, came up. That thing was up like 15% one day. It just absolutely insane for the low floats. SPACs took a back seat for yet again another week. But it was an exciting week all around. I couldn't believe how fast the week went by. But then at the same time, I was like, oh God, is this week over?
Yeah, it was definitely one of my better weeks. I had to really adjust, and I do post all my positions every day, and a lot of people were definitely questioning some of my moves. I did have to scale back some of the SPACs, but one of the things we want to talk about is playing your strategy and playing with risk management, but at the same time, taking advantage of this crazy market and just being able to go balls to the walls when you need to.
Yeah, exactly. We've seen people 5x their account inside the past, 6 weeks, which is really awesome to see. We talked about this, but that's not really my game. But for the people that are, trying to adapt to the best, reward that the market gives them, I mean, they're just absolutely crushing it. We've seen them inside the past 6 weeks.
Yeah, and just retouching on changing the strategy is like, what we just mentioned is the theme this week. It seemed was low floaters halting up and then running another 30%, and then they dip, and then you can actually play them on the dip again. And when I was doing those, I was sometimes slapping halts, and I never did that before with tons of capital, just because it's what has been running this week, and I want to take advantage of those. And although that isn't usually my plan, the people I'm trading with in voice every day, I usually don't like to chase things like this, but it doesn't feel like we talked about last week. The market's rewarding chasers. I'm not putting this into my forever plan, but hell, I mean, if it's working right now, you got to take advantage of what's working, unless it's going to cause bad habits in the future.
Yeah. No, that's a really good point. And I think that what you just brought up is a really, really, really important lesson. Recently I've seen some people who have done 5x their accounts. So like we talked about with GME, the backside of the trade comes 10 times faster. This also pertains to your account. So it's really important to press it while it's hot. But as we started to see, is that we've seen the tape change a little bit. And so when I went on Twitter, some of the people that have 5x their accounts inside the past 6 weeks were also down 20 to 30% inside the past 2 days. And I think that what Dan just said is a really good point, is it's great to play the hot hand, but you have to understand that when you take that first slap in that face, when you get too close to the oven, you need to take a step back and de-risk a little bit and stop buying the dip, going in heavier. And I think that that's what we're starting to see.
Yeah, I think one thing we definitely want to make sure is like what I got caught in was that August downtrend. That was a bad month for me. And it was just because I kind of added those dips and that just kept dipping. And obviously SPAQ, now Fisker, played a big role in that. But at the same time, I'm not going to get caught in that same thing again. That was my lesson learned from there. And I know my strategy enough and I have conviction in my trading enough that whenever I need to stop trading so rambunctiously like I am right now, I can. And it's not going to form a bad habit that leads to me just blowing my account up because I'm in and out of these quick. And that's, I think that's what you have to understand. Like you said, the hot hand, but also after a while, that hot hand goes away and you have to go back to what works for you.
Exactly. Don't try and fight the trend. And I think that this should be a real wake-up call because I think what it really stinks because I love interacting with so many of you. But it was awesome to see how many of you were 3, 4, 5xing your accounts. But then for you guys to turn around and be down 20 to 30%. Now, again, that's a small hit on your overall account compared to your gains.
A few years ago, if Andre Iguodala was just on fire, they're passing it to him every time. But, once he starts to missing, they're just going to go back to Steph, Clay, and KD because they're way better shooters usually. Go back to your usual strategy, but sometimes something's hot and you got to play it.
Again, I feel like PGIR has just turned into, to a certain extent, like a broken record.
Like a caution, like a crossing guard. Yeah. Hey, careful.
Yeah, exactly. But I hope that at least if 5 people that listen to this at least save themselves from blowing up, then I'll feel okay about it. Because it really stinks. Because like I said, I already had 2 to 3 people that lost 20 to 30% of their accounts. And I think that that's just the beginning because we saw, now that we have no stocks underneath $1, everything is just super overextended. And I think we saw a clear tape change earlier this week.
Yeah, I think that's another good thing to talk about before we go into the full tape changes. Are we going to have to become dollars going in raw? We're like running out of penny stocks.
Yeah, we're running out of penny stocks. It's funny because we used to complain about reverse splits that would make stocks, go from 30 cents to $3. I think pretty soon we're going to be doing, regular splits back to penny stocks, so that we at least have something to play underneath $1.
Yeah, we're either going to have to get some offerings, some huge offerings or some splits or maybe promote some OTC stocks to the NASDAQ because this is, what are we going to do? I like the name of the podcast.
Yeah, exactly. Yeah. Give me shit back at 8 cents. Dear Lord.
Yeah, Vissel, we could be trading that at 12 again. 12 cents.
Yeah. Oh man, that was one of my biggest positions at like 14 cents. Oh, but So I think that we've seen listen. If you're beginning to trade and you think that this is the normal, again, I'm just going to tell you, this is not normal. When I used to do scans for one of the things I used to use is FinViz, and I would look for anything underneath $2 a share, and then I would search through 5, 6, 7, 8 pages of stocks underneath $2. Now I go in there and there's literally like 15, and I know all of those all those companies like the back of my hand. So it's just wild to see inside the last 8 months the penny market, but the overall market. It's incredible.
Yeah. Do you think a lot of these pennies are just no longer penny stocks because all these new traders? Obviously the new traders have a lot to do with it, but just stimulus checks. Hey, the only thing I can afford is some penny stocks. If this one goes to $5, I'll be rich kind of mentality.
Definitely. We saw, I think Verde tweeted it. It was just buy all the stocks underneath $1.
Yeah, like he said, it was becoming a legitimate strat to just buy stocks under $1 because they'll be over $1.
Exactly.
And he said that whenever there was only 15 of them left, and now I think there's 3. So that's a pretty good average. That's like an 80% working rate right there. But yeah, this past week we did see like a lot of lower volatility in the market, and you talked about a tape change. Can you kind of expand on that whole thing?
Yeah, definitely. So if you guys have been listening to PGIR, you know how much I enjoy statistics and knowing the numbers, because I feel like when I know the numbers, I can understand something and I understand the why. And so what part of this market, the market, as easy as everyone makes it seem, when you get down to it, is honestly one of the most complex things. I put that right up there with understanding the brain. It's incredible. So I want you guys to think about something. Okay.
Neurologist and stock market analyst.
Yeah.
It's just Jim Cramer and I don't know any
Pennies
neurologists
going in
like
raw and brain surgery.
Meredith Gray.
Yeah. Okay. So think about this. In 2006, 25% of the market was run by algos. Okay. It's estimated in 2020 or 2021 that over 80% of the market will be controlled by algos. So we talk a lot about retail trading and how much retail has on the effect of the market. But when we really break it down, 80% of the market is controlled by algorithms. And so there's a few different, there's hundreds of different of algorithms, but if you watch a chart, and SNDL was a perfect example. If you watch a chart, and if you had SNDL or you have your trading computer, bring up the chart and put on SNDL on the 3-day 1 minute. Okay. On the bigger volume days, what you can see is that you can see the algorithms run it up, dump it, scoop up the shares, run it up, dump it, scoop it up the shares. And it's literally almost a perfect higher low all the way up the chart. And then you can see where the algos turn off and it just starts to trickle down. You can see retail tries to buy the dip and there's just not enough staying power. So one of the things that Ricky, Bobby, and I talked about on the trading floor inside the Atlas Discord is the tape change, okay? Something that we saw on a smaller scale in 2017, 2018 was when they turned off the algorithms. Same thing. They ran the wheat stocks and then the algorithms completely turned off. So I think we're getting close to a point to where the algorithms may be turned off. And what we're going to see is that we're going to see volatility die. Not necessarily die, but become much slower. So something right now is going 200 to 300% on absolutely no news. I feel like every day I'm waking up and I'm texting inside the Discord saying, hey, why is AAME up 200%? Is there any news? And I'm just getting no. So like we talked about, okay, chasers are being rewarded right now. When the algorithms are turned off, think about taking away 80% of the volume on average. Okay, so if something trades 100 million shares, if you take away 800 million shares, what do you think is going to happen to that stock? Right now, we're seeing something like SAVA have okay data and it goes up 200%. And that brings the entire Alzheimer's sector with it. Okay, now think about it this way. When the algorithm dies off, say they turn off the algorithm, then what's going to happen is SAVA, if they do any kind of decent offering, then they're going to bring down the entire sector because there's no volatility to buy that dip. Retail can keep it up for so long, but at a certain point, if the algorithm turns off, retail will not be able to keep the stocks where they are right now.
Okay, so if these retail traders aren't going to be able to keep it up, and that's what will cause these stocks eventually to drop, in your opinion, is could you kind of explain to the newer investor what these algos or algorithms are?
Yeah, definitely. So the algorithms, let's think of it like a math equation, and every time that something like a certain stock aligns with this equation, then what an algorithm does is it buys and it gets to a certain point and sells. And sometimes it's just buying it and selling it for 10 cents, but it's doing that tens of thousands of times. So the algorithm, like I said, on the SNDL chart, you can literally see where it's run by the algorithm. You'll see literally buying, dump it. Buying, dump it. Buying, dump it. And it just walks it all the way up the chart. And then it gets to a certain point and it shuts it off because whatever the math equation may be. Let's say that the math equation says, okay, 11:30 is lunchtime, so the algorithm automatically turns off. Something as simple as that, and you can see where SNDL drops 25%, simply because the algorithm wasn't running it up, and retail isn't able to catch that dip. It trades 1 billion shares on average this week. I can almost guarantee you that retail probably was maybe 25% of that, maybe 30%. So 70% of that volume was the algorithm. So that's what I'm saying is that these algorithms are basically a math equation. And so they have a certain set of parameters, the probably relative volume, maybe news, something like that, maybe in a sector. And kind of like, once it hits these parameters, then it locks onto the stock and it's going to run it, dump it for maybe like a 2% gain, run it, dump it, 2% gain. And they're just doing this over and over and over again to 5, 6, 7, 8 stocks. And that's why we saw all the under $1 stocks run, because there was an algorithm on it that said, okay, great, fantastic. There's not many stocks underneath $1. So it comes down to supply and demand. If we run up these stocks, then retail is going to come in and just help boost it. And that's really what the algorithm comes down to, is that think of it like an equation, but the equation takes over the stock. So if you're on a stock and all of a sudden it just starts shooting up, and it doesn't have any news, there's probably an algorithm on it.
One of my favorite memories of the word algorithm is one time my buddy was explaining to his drug dealer how Bitcoin worked. And after he used the word algorithm once, the drug dealer was out. He's like, yep, I don't get this.
Yeah, no, that's a really good point. It is super complex, and I guarantee I'll get at least 20 DMs telling me that I'm nuts, but I'm telling you, you guys, we saw a clear tape change inside, I guess it was Wednesday, Thursday, and Friday. But if you look at anything that had above a 15 million float, it probably didn't have much volume. The stocks that were running were low floats, right? The CLEU, the TGC, or was that Wednesday? Anything with a low float was running, like we said. February, low float. But you saw things with news and red, which is kind of insane. And not many people picked up on it because we had low floats halting all day. But I think you're going to see a clear change in the volume. You're going to see things where they get news, and if you buy that news, you'll be red on the day. And that's what we're going to see is that volume precedes price action. And if that volume, which 80% is algorithm, if that volume is taken away, the price isn't going to move like we're seeing. We're not going to see, like right now, we're seeing 2, 3, 4, 500% movers daily. You will not see that if they turn off the algorithm. And that's why I keep stressing that play the hot hand. But as Dan says, party near the door, because if the algorithms do turn off and you keep buying the dip, the people that 5x their accounts will keep buying the dip, and all of a sudden their account will be down 80%. And listen, if that's you right now and you 5x your account, okay, you might not want to hear it, but you have to hear it, so that if you do see the tape change and you do see lower volume, you need to de-risk. You need to put your starters 1/10 of the size, and that's what we're trying to prepare you for.
Yeah, and that's one of the big things. And it's not only that, but it'll take a big emotional toll. If I didn't, right before August, like the last day of July, I had like a 20% of my account trade because PRPO halted up 700% or something crazy. If I didn't have that trade right before the whole shitty August, I would have been down bad. I would have lost it. And if I didn't have that buffer, it would have really affected my mental state whenever the market finally did get good again in like that October, September, November range. And that's one of the things. You can't lose money for like a multitude of reasons for the obvious basic of it. And then, it's tough just being down that much, just overall.
Oh, it's super tough.
Yeah, especially after you just run your winning streak. And, you never want to get on that whole roller coaster of I'm making money, I'm not. This is for me, is it not for me? But with all that being said, and whenever the algo does take back and these do start dropping and all that, I think kind of touching on having conviction in your plays, but also when to take profits on them is super important to kind of chat about, because obviously these dips are going to come, and not just when to take profits, but when to say, okay, screw this. Maybe it's time, instead of taking profits, to stop taking losses on it.
Yeah, no, definitely. And, that's a really good point. And I think that, one, conviction, if you're a day trader, there has to be a level to where the conviction means different things to different traders. I think for me, conviction as a swing trader means, okay, if the market halts down 6% and my stock goes down 15% with it, I'm going to have conviction to hold it through, because I know that the stock market can't go any lower today. If it's down 6-7%, okay, it can't go down any lower today. So for me, that's what conviction means, is that I'm holding through the tough times. Okay, if an offering drops, like for instance, NSPR, an offering dropped, it dropped 12% from my initial entry. So, some of my friends that were in it, they dropped the stock. Instead, I loaded up, and now it's trading over 150, 160. But as a day trader, conviction probably means, okay, the stock made a lower high. Now it's creating a wedge. It broke down out of that wedge. Am I going to add more because it still has more support lower, or am I going to cut the trade? So I think that the conviction can mean a few different things for different traders.
Yeah, depending on like what kind of a trader you are, obviously conviction is going to be so much different. But even when it comes to like these SPACs, do you have conviction through it, or is it based on, okay, well, you're not risking so much? How can you, I don't want to say we should hold their hands through the SPAC fire, but at least point them in a general direction if they are worried about these losses. And like we say, if you're worried about, if it's keeping you up at night, maybe you should sell some. But a lot of people, they're like, oh, this is so good, it should turn around. But every day, your confidence on it just gets less and less and less.
Yeah. So I think we should break that down to three different areas. One, if you're holding something that hasn't announced their partner yet, and the valuation is say the stock is trading at 17 and they haven't announced a merging partner yet, but it's speculated to be like Tesla or something, I think that that's something to keep in mind. If it's not Tesla or it's not XYZ, what's your downside risk? Your downside risk is 50, 60%. Because even if it is Tesla, you have to ask yourself, what's my upside? So I think that pre-announcement, you have to ask yourself that. And if you're holding this back, let's take something like the longer term ones, like Clove, Lots, UWNMC, things of that nature. Okay, the mergers already happened, the business operations are going through, things of that nature. So I think you have to ask yourself, if you're holding that, one, if you're holding it as a swing trader for a catalyst, what's your catalyst? What's the upside? If you're holding inside your long-term investment account, you have to ask yourself, what's my what's my downside? What's my upside? And how much is this going to affect my portfolio? So I know across the board, when I'm inside for my longer portfolio, I usually keep about 5 to 10% of my account inside each individual stock. So I ask myself, okay, if XYZ goes to zero, what does that do to my portfolio? And I say, okay, I take a 10% hit max. That's not going to break the bank. But for instance, something like we were playing Overstock around this time last year. I had started in on it at 8. It dropped down to 3. So then at that point, I doubled up. I had 10% of my account. So even if it went to zero, 10% of my account would be lost, but that's it. The stock ended up going to 150 a share. So I think that you have to ask yourself, one, what's my risk? Two, what am I waiting for? What's my reward? And three, what are the different downsides? I got some beef on Twitter because I had talked about TRCH, and I know that some other traders have been on TRCH before me, but one of the most important things when I'm trading is that I want to know, I don't want there to be 1,000 different variables. So the reason I see the most upside with TRCH and something like TRCH, instead of getting it maybe even $1 lower, is one, because they dropped a massive offering. So I already got it at a discount. Okay, now I know that they don't need cash. Okay, what if they dropped the offering with warrants? Then the people that got in $1 lower would have been screwed. Then you have to ask yourself, what's the share structure? I know the share structure, so that takes away a variable. So there's a bunch of different things. You want to ask yourself, what are my variables? What's my risk? What's my reward? And what are the catalysts? What am I waiting for? And I think that if you can't answer that, you can't answer all those questions, then you need to seriously readjust your portfolio to smaller position sizes, and you need to really hone in on your positions and create a plan. Why don't you have a plan for these things?
Yeah, I mean, obviously having a plan, but whenever so many people just are getting into things off of Twitter calls that just start going down or something like that, it's bad. Even we take losses on longer term swings too. Sometimes the risk reward isn't there. And I'm not saying any of these SPACs are necessarily bad or aren't great long term holds, but for me, the opportunity cost for a little bit of them was just eating at what could be happening, just day trading these crazy things going on right now. But, when they're hot again, they're hot. And that's, trading what's in front of you is always so big. I mean, just one thing I got some hate on. Let's get some, this may get us some 1-star reviews. I got CCIV puts for April and June. I missed the party on it. And there is a lot of information on Lucid and CCIV merging. But if it falls through, and there have been so many of these things that have, why not? It seems like a pretty good buy for like $400. And if they go 4,000%, they go 4,000%.
Yeah, that's a really good point. We talked about this on Benzinga. Is that CCIV, if it's Lucid Motors, what's your upside? Personally, I think CCIV, your upside is maybe $50, $60. That's probably what it's worth. Now, that's not saying that it can't squeeze like a QS to the hundreds, but you see what QS did. It came back down to 50. And I think that this, even if it squeezes to 100, I think it comes back down to 50. But then you have to ask yourself again, what's your downside? Okay, there's no news. There's nothing. There's nothing. Okay, there's speculation right now. And this thing's trading at $40 a share. You could lose 80% of your investment just like that in a day. If this thing will get killed. So I think your puts bet is really good, and you can hedge yourself. That's another hedge for your SPACs. If you're heavy in SPACs, buying puts inside a SPAC that you think that everyone's hyping up that you think is not worth that is a really good way to hedge yourself, because if one SPAC that everybody's in gets killed, all the SPACs are going to take a dip.
Yeah, and we've talked about all these, talked to all these people that go public through SPACs and everything. But it seems like the trend of them, they merge, they have their day traded, but buying puts on them before they merge, they seem to drop like 20% over the next 3 weeks before they really reverse.
Yeah, I mean, it comes down to valuation. And we talked about this before, is that some of these SPACs are getting, they're getting bid up, 5 times the valuation. So 5 times the valuation. If you're merging with something that does $500 million in revenue, and the SPAC is worth, together combined $5 billion. I mean, then it's worth it's worth a tenth of what it's trading at. So what we're seeing a lot with these SPACs is that they're getting ran up into the merger, way past their valuation. And then once they do merge, we're seeing dips back down to what it's worth, because again, that's what it's worth. SPAC craze was nuts, and everything that was a SPAC was getting bid up way, way over their valuation.
Yeah, but like I said, I do think that a lot of these will be great holds for the long term, and I do plan on re-entering them, and I still am holding a good bit of them. So obviously, this isn't like go panic, go sell. This is just
no. Yeah,
like we've been saying for weeks. Be smart, risk management when it comes to them, and I think that about covers it for that segment. And I think now we can kind of just get into our swings, really. And I know you have some DD. You went crazy on the trading floor on TRCH, but before TRCH, I know you'll get on that. You won't get off it.
Hell yeah.
Your swings. Right now, I know I mentioned it earlier. I paper hands some. Not paper hands. I don't like that term. Makes me sound weak. I freed up some opportunity cost. Went a little bit lighter in some. And it paid off. But, I'm ready to enter them back at any time, just watching the market and careful of what the conditions are. But yeah, I'm still mainly, I have my UWMC and my lots, and I just don't have enough that'll make me cry if it goes down like crazy.
Yeah. Yeah, no, that's definitely a good point is adjusting your risk. And I think one thing that we had talked about was, and even what we talked about inside this episode is seeing people, seeing the algo change can really make you want to de-risk. And I think it's important that, especially, places where you don't see the most value to de-risk. And that's why I started to look for, some bigger swings, because once low floats are done, and, let's say that volume does drop, I want to be somewhere where the best risk to reward is. And that's why the 3 swings that I'm most heavy in right now is in no particular order, because to be honest, I don't know how much I have in each. But it's TRCH, VISL, and COMS. So that's TRCH, that's VISL, and that is COMS. And so just talking about swings in general, if you're new here, the way that we kind of handle swings is that we try and we do it a few different ways, but when we can fit a stock or a company into a thesis, that's really great. And then you add on a nice chart, that's even better. And then on top of that, the company has its own catalyst. That's when we really start to hit the jackpot. And that's what I think we're seeing here with these 3 companies. They each are fitting into the thesis, which I personally think that most of the Biden administration stocks have been getting hit. So what I mean by that is that we had the solar run, we had the electric vehicles run, we now had the weed stocks run, which I think could see more upside. But my point is that one of the things that Biden wants to focus on is drones and really emerging markets and getting the technology to the next step. And so that's why I like the drones, and I also like the 5G that comms has. And then TRCH, for everyone out there, I got probably 50 DM telling me that TRCH is an oil company and that they're not diabetes. Guys, they are merging with a company. Read my tweets. I know that they're a little lengthy sometimes. Go back, read the tweets, read the Discord. They're merging with Meta. Meta is a massive upside potential. I think they estimated that they have 13 billion in a market application. And so what that means is that they're in a bunch of different emerging markets, and their potential market reach is over 13 billion. And that doesn't even include the MRI scan that they're trying to create. And that doesn't even include the diabetes, because you can't include something that you're still testing on. And so I think that that's a really important key here, is that TRCH, one of the backlashes of TRCH is that they're only getting 25% of the company. And this is the way that I like to look at it. They're getting 25% of a company that could be potentially worth, let's call it, even if they got 1%. Okay, let's say that they're valued at, let's call it that Meta and TRCH together, when they merge, is valued at $5 billion, because that's the amount of assets as of September 2020 that they had on the books. So if we take them just at that value, and TRCH has 25%, okay, TRCH, even if their market cap is underneath $1 billion, is still undervalued. Okay, so if that didn't make sense, again, the market cap is what the company is worth, based on the shares. So TRCH's market cap as of right now is 400 million. Okay, so now if Meta, when they merge with Meta, can reach a market cap of 5 billion, that would mean that TRCH's piece of that, so the 25% of that piece, would be worth around, was that like 1.25? So again, if we're going to value Meta at based on their assets, so let's call it, and that's not how that works, but let's just do it that way. Okay. Let's value them at their assets, which is 5 billion as of September 2020. TRCH gets 25% of that. Okay. That means that on book, TRCH is worth at least $1.2 billion. As I just said, the market cap of TRCH currently is 400 million. So that means that we could potentially see 3x from here just based on valuation. Now we can go crazy and, start saying stuff like, the PE ratio, and then it just gets stupid. We could see like 10x from here, but I'm not worried about that. I'm worried about the merger, which is 1 month from February 12th. So we're within a month. Okay. Book value of Meta. Let's say we value it at 5 billion. TRCH would be valued at 1.2 billion. And right now it's trading at about 400 million market cap. And so, I said a $10 price target is doable. And I think that, you can see the numbers. That's definitely doable. Now, that being said, I think it's important to think about our risk here. I love TRCH, but we always have the risk that the merger doesn't go through. So the CEO of Meta did tweet that they have 47% of the votes for the merger. But if there comes out a headline about the merger not going through, we just cut our ties. Okay. And that's how I'm going to play that. I don't love playing merger plays, but this is one where I see the best risk to reward. Okay. They have the cash. Okay. They're merging with a company. And even though they're only getting 25%, the company, that company is in every emerging market and has 89 patents. They are well on their way to being a massive company. One of the ones I like to compare them to is Tata. If you guys look them up in India, they are a conglomerate and they are massive. They have Tata Motors, they have Tata Health. They are massive. And I think that that's what Meta is trying to go for. So that's enough about TRCH. Like I said, they have the cash. Right now, they look like they have the votes. The chart is primed, and I'm really excited for this one. We're about 3.5 weeks out from the catalyst, and I think that this thing's just gonna rip into the catalyst, and I would love to see double digits by the time that the merge is approved, and I think that we can really get there.
And if you're looking for more DD on TRCH, you can also just search on Twitter from Hugh Henney and then search TRCH. I'm sure. If one of you guys wants to make a thread of it all and post it, we'll give you a retweet and we'll really appreciate that because a lot of his DD is spread out over the course of a week. So you have a lot of stuff on it, and I think even whenever we were on Benzinga on Friday, it was funny. I mean, you saw we mentioned it at 2, or you mentioned it at 240. Whenever it was on a little dip, it was kind of consolidating around that mark, and then they just 30 minutes later they're like, holy shit, that thing is ripping. It was up another 25%.
I love the chart on this thing. Let's just keep stair stepping it. I mean, like Dan said, it was consolidating at 240, it broke out to new highs, and now it's consolidating again.
380, it hit almost 380 in after hours.
Yeah, exactly. And I think that, that's what I mean is that this thing loves to rip. This thing loves to consolidate. The chart is perfect. It hit new all-time highs, came down, consolidated, hit another new all-time high, and now it's, down a little bit and it's consolidating. And so I love this chart. And the thing that, a lot of people don't understand about mergers like this is that even I said it, my cousin who works at a fund, I sent him TRCH and he said, why the hell would I buy this? And I said, dude, don't look at TRCH, look at the merger. And he said, what? They're merging? And they looked into it, and guess who bought some? So I think that that's really important, is that as the word gets out, that TRCH is merging with a different company, and the company, and when it gets out what the company does and who the company is, I think that it's going to get more eyes on it. I think that 10 is doable if everything's shaping up for $10. And I think the other thing I want to talk about was the special dividend. So a special dividend is when a company pays a one-time payment back to the investors. Now, the important thing about a special dividend is that, or any dividend, is that if the company can't pay a dividend, they won't pay it. So I think that that's really important, is that they're not reinvesting the money. What they're doing is that they're giving it out to investors. That's going to give investors a reason to hold this stock, which is different than any other SPAC, any other merger, anything like that. And so I got another question of why would Meta merge with TRCH. One, they go public. Two, TRCH as an oil and gas company was a complete failure. But guess what? They're not going to be an oil and gas company anymore. They are selling all of their assets and all of the money that after they pay their, debts and other things like that is going to go back into the investors as a special dividend. And so I want you to understand that, yes, okay, as an oil and gas company, complete garbage, but they're not going to be an oil and gas company. They are wiping the slate clean with Meta, and Meta is trying to create, alternative energy. And I think that, this sector is what Meta was missing. TRCH, it was a trash company that they could pick up and completely transform. And so I really love TRCH. Like I said, I'd love to see double digits. The chart is primed. We have the catalyst within a month, and they have the capital. It's in an emerging market. They have billions of dollars of potential market, potential market reach. And I really love this. And I'll be dropping a little more DD throughout the week, as it rolls in, because you have to always do, constantly updating DD and doing DD. But while we're here, we might as well give a little more DD. We talk about the merger as the catalyst, but something that's really important is that as Meta releases news, that's good for TRCH. Okay, now Meta does trade over the counter, but I don't touch over the counters. I don't touch them. I'm not doing that. If you want to touch it, that's you, but I don't touch that. And one of the important things is that Meta on their presentation has 7 different catalysts within the next year. 7. If they give an update on any of them, what do you think TRCH is going to do? TRCH is going to run with the Meta news because, again, they're merging. So my biggest thing that I'm looking at is the MRI medical imaging, okay? They are, inside the investor presentation, they are saying that they want to commercialize it, okay? Possible market entry by 2021. By 2021. We're, if we start getting updates on the MRI scan, this could be massive, because then once they're on the New York Stock Exchange, then funds can invest. Right now, no fund is going to invest inside an OTC. So I think that's really important, is that big fish are going to start coming in. Current shareholders have a incentive to hold, being the special dividend. And I'm really excited for this. With the way that things are shaping up. Now, like I said, if the merger doesn't go through, then we'll be dropping our shares. But I really like where this is going. The CEO claims that they have 47% of the votes. 47%. That's massive. We're 1 month away and they have over almost half the votes. So I'm super excited for this stock.
All right. Well, if you haven't heard enough, this may be the end of the TRCH DD unless he just keeps diving in. We pray he's done. However, it is Valentine's Day.
That's true.
Right?
That's true. It is Valentine's Day. Are we Can we call her? Will you be my Valentine?
Yeah. Don't tell your girlfriend. I know. Whenever you're saying all that, I always think it's funny with you knowing all this random tidbits about the biomedical field and shit. Like if you were dating like a nurse or a doctor and she gets home and you're like, well, can I go with you to the MRI department? I want to see how CAT scans work. And just random shit like that, picking for information. But I mean, it is Valentine's Day. So before we get into a bunch of, the nitty gritty of everything, how about for the single people, we like to smoke weed. Not much else to do on Valentine's Day. So how about we talk to the guy who knows it best, who's been investing in weed stocks for about almost a decade now, the Wolf of Weed Street. All right, so today we have on Jason Spatafora, a.k.a. the Wolf of Weed Street. How are you, man?
Good, guys. How are you?
Doing awesome. Thanks for coming on.
It's I've been waiting. I'm like, when am I going to come back to the guy, to like my roots? Everybody has to go home at some point, and you guys are like the new young guys. And I'm like the old shit now. So don't worry, one day you're going to be in my spot.
You got it. You always got to come back to Twitter eventually. I mean, that's where it all happens. I guess we'll kind of start off with, how'd you get the name Wolf of Weed Street?
It was pretty simple. I was just engaged, and my fiance went out with a bunch of her friends, and I was like, oh, all right, I'm going to sit home, and I smoked a joint and was like sitting on my couch, and I saw a trailer for Wolf of Wall Street, and I was like, Wolf of Weed Street, that's a clever name. I'm like, somebody has to have it. And nobody had it on Twitter, so I just jumped on it. And my whole thing was, all right, I'm going to be the anti-Jordan Belfort and just talk as much shit about all these companies, in like pot stock arena. So this is January 3rd, 2014, to give you an idea. I know because I just had my 7-year anniversary.
Congrats.
Thanks. So yeah, that's how it started. It was just kind of like just for shits and giggles. And it just kind of morphed into, something else.
That's awesome, man. Right before we were talking about this, you said before there was a Zach Morris on Twitter, there was you. There was the Wolf of Weed Street.
Yeah.
Could you kind of give us that like timeline? And you said you also had like the same. You had your era of Tim Sykes for you.
Yeah.
Like, how did the competition end up? Because I mean, we hardly hear anything from Tim Sykes now, mostly because he has all of us blocked. But
yeah, because he's a twat.
He's getting sued for everything he's ever made. He stole, trade to scan or allegedly. Yeah, he's getting sued. What's he care about us? He's getting sued for millions.
Yeah. Yeah, I used to do some gangster shit to that guy. I mean, I could get into it.
Please.
I always say this, and I have no problem saying it openly, that every breath of air that guy breathes since 2014 is a gift from me. Okay? And I don't mean that as a euphemism. I mean that like real talk. So
Jesus Christ.
I think we're going to be friends.
We're like 2 minutes in.
Guys, I told you it's going to be a fun show, right? So, back in 2014, like I had alerted a stock at 004. All right. And the thing went up to 45 cents in a 3-month period. I had a 10,000% gain. So like I was making people millionaires from this. I mean, I made the #1 Call of Duty player in the world $1 million just off of this.
Awesome. And it's kind of crazy because I feel like a lot of gamers are getting involved now. I mean,
I just had a FaZe Clan follower follow me 10 minutes ago.
Yeah. So, and then like Tim Sykes and that whole crowd was, kind of going after me to try, like Tim Sykes, like, I'm in men's. So like, I don't know if you guys ever saw it, but I was in Men's Journal in 2014 about pot stocks. And Rolling Stone calls me and they're like, I want to do, we want to interview you. And I was like, I thought it was bullshit. And the guy that was writing the story was following all this chatter, and Tim Sykes is just like going after me. And, I got a bunch of people into this stock, like just friends. And, I live in Miami. I'm living in Miami at the time. It's got a lot of unsavory characters, and look, I don't have any issue saying it. Like, I got friends that are straight up gangsters, and one of my friends, or I should say, acquaintance, was like,
you're one of your gang members.
He's like, I live in the same building as this guy. He's like, I'm just gonna thump him. I'm like, what do you mean you're gonna thump him? He's like. He goes to Dunkin' Donuts every day. He's driving like that beat up Lamborghini. He's like, I'm just going to, fuck the guy up. And I was like, dude, I'm like, you can't. He's like, why can't I? He's like, why can't I? He's like, look at what he did. He's like, he just cost me $100,000, like doing all this shit. And I'm like, dude, because you literally just told me you're going to fuck this guy up. And I'm like, and I know you're not going to just like slap the kid around. So I'm like, please don't. I'm like, because then you're putting me, into a bind. And he let it go. And the crazy thing is, and then Sykes is just like being an absolute cock to me. And I'm like, I can't.
Man, how do you? I wouldn't be able to handle that,
dude. My
Hockey's
wife,
son of a bitch.
My wife is like, if you ever see him, she's like, you have my full permission. Like, you can drive your car into whatever crappy, import he's driving, or punch him in the face. She's like, I'll bail you out. She's like, that's the only person in this world, because he was such a douche.
Dude, his like TV shows where he goes on the yachts. I think that
Below Deck.
That was.
Yeah.
He like gives the guy like $5,000, like got nothing.
The captain, when we were getting into it with Tim Sykes, the captain DM'd me on Twitter and was like, "That guy is such a prick." He's like, "I had to sign papers that said that I couldn't, say anything about him after the fact." He's like, "The producers just knew how much of a dick he was." He was like, "I wanted to break all codes, but it would cost."
Well, you're breaking his NDA right now, so
Yeah, no, he's fine. He's fine. I'll pay for it. It's fine.
He like, that guy's just, look, guys, it's like this. You can't trust a guy that his profile picture is from like 2005. Like, yo, Tim, it's 2021. You don't need to put that like bullshit. I've never even heard of Trader magazine. Oh, look at this guy. Like, he doesn't look like that. One time Tim sent, and like when this Men's Journal thing came out, he, he's like, we had to take, because he basically snaked his way into an article with me, and then like made it seem like, he was just said a bunch of things which he didn't say, and I was just like, all right, I'm not engaging with this dummy. And then like one time we were just beefing on Twitter, and I was like, I called him a pederast, and he's like, "Yo, can you take that down?" So,
jeez. I can't.
Yeah. I mean, I also fuck with him too, though. Because
it's not.
I'm kind of like with some of you guys, like one of the tools that I would do is I would pay for somebody to go into one of their rooms and see what they're shorting, and then just spike it on them on Twitter, and just like candle like that. And then everybody just starts going nuts, we are kind of a little too, I want to say a little passive, maybe too passive. We don't really go for just fucking people. And a lot of the people that even talk shit to us, it's not too many shorts. Well, unless they're like bigger guys. A lot of the hedge funds, like it's weird whenever hedge funds are talking to like fake 90s TV characters. Like that's weird, right? Yeah, and like the one thing, like, anonymity is great. Like once a CEO of a company like outed me, it was just kind of like game over. So like hold on to that anonymity, but also be very careful. Because, it's like Warren Buffett says, if a cop follows you for 500 miles, he's going to get you for something. And I don't think like younger guys know what the penalties are. And, ignorance is not an excuse, so you got to be think of it this way. You make $100,000 from a trade. And if, let's say, you alert something and you're selling into that alert, you're going to get fined, and then you're going to get a 6x penalty on whatever you made. And they'll go back.
Like, oh shit, I'm going to like erase shit. No.
Yeah. So like, if I tweet something, like, I'm usually not a seller unless I'm saying like I'm selling. You can't just be like, oh, well, I'm not going to tell, like, I took that approach. Like, all right, I'm never going to tell people when I sell, like, it's up to you. And then I got a call and I was like shitting my pants, like just making sure I knew the rules. And I was like,
I just don't, I'm like, okay, I'll just tag along with other people. I like hardly ever make calls. I'm like, whoo, this one's doing good, but I'm never like, fuck.
Yeah.
I'm never calling shit. So I guess going along with the whole Twitter thing, was that whole Tim Sykes beef during like the Twitter age? I assume you got in Twitter pretty early.
No, I mean, it was really just that time, like I started. 2014. Yeah, I started like just trading really, and not even trading. I was investing long term, in like mid 2013. And I started with like $1,500, kind of like everybody. And then when I started trading pot stocks, there was 13 of them. Now there's like 300. And I really gravitated to that area because of the volatility and mainly the irrational exuberance and the animal spirits of the market. It's like charts out the window. And being that I had already come on as like a sentiment and psychological investor, cannabis was like perfect for me just because of, the craziness that went on. But yeah, I mean, that era was definitely nuts. It was like really easy money, but I also didn't understand that, any fool could make money, and it's really hard to keep it, after the fact.
So do you feel like we're kind of seeing the same kind of thing now, or on a much larger scale or smaller scale?
Yeah, look, people are going to get destroyed, and that's fine. Like, I get it, like I wouldn't do as well as I do if it wasn't built off of like the blood, bones, and tears of the retail investor that just doesn't know better. And that's not like me selling into them. That's like them panicking and creating a dip that I'm going to buy or whatever, or just them not understanding like value. Like everybody's like today, for instance, like, oh, look at Tilray, don't get in front of that. And I'm like, I'm buying puts, I pulled 36% and they were expensive. They were like $900 a contract. And like my whole thing is, if I see $100 on the ground, I'm just going to pick it up. And I just do that, and then
one thing we always mention is how like whenever the sentiment's all on one side is a lot of the times when it switches.
Yeah, exactly. And, and new invest, like, the best piece of advice I could give the new people that are coming up and watching this, it's, take part of your profits and invest them into companies that you want to be long and, over the long term, like companies, are going to be around in 5-10 years, as a way, not so much for like the money and like the buzz of getting into this, but more so you don't do stupid shit with your money. Like decide like one day, hey, I'm going to jump into Tesla calls, because I just made a killing yesterday. It's like, think about the thing that people need to realize is the biggest threat to your account is you, so you got to remove the bullets from your gun that are going to shoot you in the nuts, maybe not today, but tomorrow or next week.
Yeah, I think one thing, whenever people like take these gains and they get a good win, they're like, where do I put them? They feel like they immediately need them, but it's always good to have like, bullets in the chamber per se. And we always talk about just waiting to let the play come to you. So it's nice to have someone preach about like the same stuff, because we always risk management is the number one thing, because I mean, you're your own worst enemy in this game.
Yeah, 100%, so like the model that I use is like when I trade options, 50% of the profit from the options goes directly into stocks I want to be long, but don't want to necessarily be long with my money. So this is a lot of reopening trades, companies with good balance sheets, Budweiser, easy stories to understand. 25% comes out and goes into my account, into my bank account. I pay myself 3 times a week without fail. Good week, bad week, whatever, Wednesday, Thursday, Friday. And then the other 25% is to grow new trades and put new trades on, and it works, and as somebody that's done this for a while, ever since I really adopted this strategy, I'm like kicking myself, like, why didn't I do this sooner? Because my account is just like really swollen since I adopted this strategy.
A lot of newer traders, like whenever they're going full time and like quitting or I guess just going full time in general, they don't know when to take out profits. And I think towards the beginning, it's really smart to just be super frugal and treat yourself like you're the CEO of a company. The less you pay yourself, the bigger your company can grow, like with compounding.
You got to treat it. I always tell people, it's like, think of it as you owning a pizzeria, and like, you're not going to make $1 million selling a pie. You're going to make it by doing like dollar slices. You're a volume business. So your whole thing is, even if it's little profits, as long as it's not big losses, your account's going to grow. And especially early on, you need to get into that rhythm and get that like muscle memory of trading. And I'd start people like, start with $50 a day, 75, 100. If you could do that 2 weeks at a time, by the time you get to like $200 a day, like you get it, and then it's a straight shot. Then it becomes really easy,
Yeah, I think that, that's basically the main thing. One of the biggest things for me is whenever I got to around just 40,000 in my account, I was thinking to myself, if I can just do 1% a day, I don't need a job, $400 a day. And then that 1% a day is just so much more. My 50% a day when I started is now like way less than my 1% now. It's crazy. Yeah. So it's all about compounding.
Yeah, look at it like this. To your point, like $400 a day, like make it an extra $100 and you're at 500. $500 a day is like having 3 million in the bank and collecting like a decent amount of interest on it, And 1%, if you could do 1% a day in your portfolio, at the end of the year, it ends up being like 350% because of compounded interest.
Well, I'm not sure what happened to Hugh, but we will go on. Going into the weed sector, I guess you mentioned you kind of really started in it in 2014 where there were only 3. I don't know if they were OTC or on the market or what. Yeah.
Everything was an OTC company. The only company that wasn't an OTC company that I was long was GW Pharma at $32.
Okay, so that's crazy. I can't imagine. I guess the commissions were about the same regardless on them back then, huh?
Yeah, it was like I had Scott trade. It was $7.95 a trade.
Well, then you kind of transitioned to 2017 where it seemed like weed got super hot in Bitcoin, and then it almost had a stigma of used car salesman. Lost all my money investing in crypto and weed. Yeah. And could you kind of take us through like the 2014 to 2017, the growth of it, and then the dying out?
Yeah, so 2014, so like Colorado goes legal in 2014, right? Like I started investing in weed in August of 2013. So like, I had stocks that were 4 cents. And then by January of 2014, they were like 40 cents. So like 1,000% gain. Between January 1st and April 1st, my account did 6,300% overall. Okay. From, which was amazing.
Yeah. I think about it like I got to remember not every market was 2020 coronavirus crazy. I'm like, that is so funny.
Yeah. Like, funny. So, people, it's funny because people throw around the term unicorn. Well, I coined the term unicorn back then, this was a crazy time where, like I had to be very careful because I would just like one time somebody asked me a question about a stock and I was like, I don't know. Let me put it out there on Twitter. And I put the question out and the stock goes up 100%. Like it was nuts like that. So yeah. And then in 2004 and then in April 2014, the bubble burst and it was really dead until late 2016 going into the election. And then, like a year after getting in, I bought marijuanastocks.com with 2 other people. And just because it was just an information vacuum. And we turned it into like this IR portal. In 2016, we saw what was happening in Canada. So we switched our model to working with US companies to working strictly with Canadian companies. And around this time, like I bought Aurora at like 90 cents or 89 cents. Like I bought Kronos at 60 cents. Like I was in Canopy at $4, to give you an idea. And then the election happened and then things just started really cooking. Now I'm doing private placements. So I'm getting into these companies early. And from basically 2016 to October of 2018, it was just mayhem. And these things traded on such a schedule. So like I invested 20 grand in Aurora. Okay. Yeah. And just because seeing what
was that the leader of the pack back then?
I'm sorry?
Was that kind of the leader of the weed pack back then?
It was the darling, right?
Okay.
You know, it was like them and Canopy. And, so I invested like 20 grand, and 4 months later, it was like $3. So I buy it at 89 cents. I sell it at $3. I make 60 grand on it. I'm like, this is awesome. And because of what I saw in 2015 and 2014 going into March and April, like I just made it a point to just get out and then trade and then get back in the summer. So I did that. Aurora pulls back to $1. So instead of buying 20,000 shares, now I'm buying 60,000 shares. Then it goes from $1 to 10. I do the same thing. And then in the following year, it goes down to 5. I rebuy 5. So I end up turning a position. Like if I had just bought, like was buying and holding, because my final exit was 12.29, right? So if I just bought and hold like that original 89 cents, I would have made 240, which is great. But the way that I did it using the range, I made 1.2 million, and now I did this with everything. I did this with Canopy. I did this with Kronos. I was doing it with private placements. I mean, it was insane. And in October of 2018, I was like top, this is right before Canada goes legal. And I'm like, the money is going to go to the US companies. And then I exited 80%, traded up until March of 2019, and March 5th, 2019, I said, look, beware of the Ides of March. Like I'm out of all of my pot stocks. So now I'm out, and now I'm short Kronos, Aurora, and the MJ ETF. And everybody's like, Wolf, you're a fucking idiot.
Yeah, I was going to ask if you shorted it on the way down.
They're like, you're so stupid. I love Twitter because you have Twitter receipts. Like, hey, look at this. But everybody was like, you're an idiot, blah, blah, blah. And my whole thing was, I'll just get back in the summer. And then it was like scandal. Bruce Linton gets fired. Market goes down 60%. And now I'm like, man, I've got a lot of bias. Like I could come into this market now and pretty much buy everything that I had before in October. I could buy it 4 times, So it's like, basically I'm going in with almost no risk. So I was like, you know what? I need a second opinion. So I hired a quantitative analyst to give me a view on a couple of companies and give me the state of the market in Canada versus the United States. And this is September of 2019.
How'd you get the idea to get a quantitative analyst? Like, where did that come from? That seems like
when you're rich, you just get these great ideas. Well, no, like you talk to like my whole thing is like be the dumbest person in the room. That way you're surrounded by geniuses. Coming up in this space and sitting at the table with people, and also like I talk to quants all the time because sometimes they call me and they're like, well, what do you know about this company? Like to give you an example, this same quant was asking me about MedMen. He's like, what do you think? And now I had got him into the space investing in private placements, and he had made a ton of money. Now he runs like a $200 million fund that does REITs in the space. And I'm like, no, you need to stay away from MedMen. This is when MedMen's like $4. MedMen went down to 15 cents. So It was just kind of like he knew foot traffic. He knew all these stats. And I was like, dude, I don't care. I'm like, I don't care if you're just cutting and pasting. Just give me like a high level. It cost me 10 grand to not come back into the space. And the space ended up dropping another 30%. I didn't get back into cannabis until July of 2020.
It's had, I guess, kind of that's perfect for transitioning into now, because it's had such a wild run. Because I guess in that 2020, you said what of 2020?
July 22nd, I bought back in. I knew to the day because I bought Terrascend at 286. I bought Harvest at 96 cents. I bought Cureleaf at $7. I bought Cresco Labs at 5. I bought Trichome at 90 cents. Green Thumb at 12. And then a couple of others. Oh, Power REIT at $8.70. IIPR at $50. Constellation Brands at 127. I actually bought Constellation, IIPR, and Power REIT actually before, but
and most of those have 15x'd.
IIPR I sold at 147. It's 200 and something now. Constellation Brands is over 200. Power REIT hit 41. I'm out now. TerraSend is at $16. Cureleaf is at 18. Green Thumb, 38. TrueLeaf is at 50. There isn't, and at the same time, I'm managing the trade. So I'm using the range to give myself insurance. So to give you an idea, like I picked up 5,000 free shares of Cureleaf in this process of just buying and selling. So I'm actually getting paid to be long the market. So, and I don't have to put any new money, like today, I'm like, guys, this market's going to pull back. I'm like, Canopy's going to pull back. Tilray's going to pull back. It's going to pull the MSOs. It pulled the MSOs $1. I sold the top and then I bought the dip and now everything's ripping.
So are you trading around the core or are you just?
I trade around the core.
So is your core like, because I know my core is, I only trade about a third.
I trade less.
Okay. So you trade less. So to put in perspective for the viewers, it's kind of like, let's say that your portfolio is 100 million, you're trading like 10 million, but that 10 million over time, as you're reinvesting the profits at the top and buying at the bottom of the range, you're just accumulating more and more shares at the bottom.
Yeah. So I do it two ways, right? So like before this GameStop stuff, Cureleaf went to 1650. So to give you an idea, I sold 2,000 shares at 1650. And then getting back in, and I sold some at 16. So I had an idea of like how much I can, reload. So instead of buying it, and then all of a sudden it drops to 16. Well, that'd be a great dip to buy. But instead of buying 2,000, I buy 500. And then it goes to 1550. I buy another 500 and then down. And so like, I'm just kind of, I'm rooting for it to go down. And then when this GameStop fiasco happened, I'm like, this thing's going to go lower because everybody's going to have to sell all these stocks.
Yeah.
And, so it gave me a dip to 13. Then I reload heavy. And then I use the excess money from those trades to add to my position, So like today, I didn't trade much TerraSend, but I got 100 free shares out of it,
That's an awesome way of looking at that. Yeah.
Yeah. And like I talked to, like I did a podcast with Guy Adame and Tim Seymour from Fast Money, and I was just kind of like going over the strategy, and they're like, it's a great strategy. It's like an option strategy, and I do the same thing. My whole thing is I want to be able to be long and be comfortable because of the size of my position. Like I don't want to be shitting myself because it dropped $1 and I'm down $100,000. I'm like, because like then you start second guessing yourself. But to put it in perspective, in order for me to lose money on Cureleaf, it would have to go below $2. So all of my positions are like that. So basically, I'm just playing with free money. And this is the same thing I do with my options. Like my option strategy is just crazy. And I learned it by trading pot stocks.
Yeah, touching on your options, are you trading outright calls and puts, or are you doing more of a spread?
No, I'm just doing. I'm not doing calls and puts. One time I messed up and I sold puts, which ended up being a win, but for a day I was shitting my pants. So I'm like, all right, I'm over that. No, just buys and sells. And I post them on Twitter. Like, I'm in an MSOS $42 call that expires next week. We got in at $3. It's like, I don't know, $11 right now. So Yeah. And I trade other things. You know, people think they're like, oh, you just trade pot. Like, no, like I didn't trade pot for a year and a half. What do you think I was doing? Like just sitting in my backyard smoking beer.
Yeah, I think that's kind of what I was wondering about. Is kind of like what you did. I know you said you shorted it, but I imagine you didn't just short it all the way down. And you, I know it's one of your big things. I know we touched on risk management earlier, but just not getting greedy is one thing. Like how hogs get slaughtered. With the, I mean, you'll take 33% on options when a lot of people are like, this is thousands.
Everybody wants a home run, right?
Yeah.
And you know, it's like every time you go for a home run, like you're gonna whiff. You're gonna whiff a bunch. And think about all the money you could have had if you just took these little wins. Like 30% is a lot. I always look at it as like, if I had my money with like Peter Lynch in Magellan, like I'm making 20%. If I can beat that, you know, that's as long as I make more than 0.3%, like from a savings account, like I don't give a shit, you know, like that's what new traders need to realize. Like the whole thing is not having losses. Like I stopped trading like high volatility options because like I found like on Monday, Tuesday, I would absolutely crush it. And then the rest of the week, I just spend my time giving it back. Yeah. You know? And then when I moved to like lower volatility options and really some boring shit, like the payouts weren't as big, but I wasn't losing.
Yeah.
You know?
So your win ratio was higher.
Yeah. I mean, my win ratio, like it's not even worth mentioning because you'd think that it was bullshit.
Mention it. Come on.
I mean, so we track it. So, you know, I have a room and we've been tracking the trades since July 16th. And my trades are at 95%. I think I have 900 and something wins and then 43 losses.
Wow. And so touching on your risk management, because it sounds like at this point you've created such, you know, I mean, you've been able to kind of call the top and call the bottom multiple times now. Let's say that we do get to, do you have a risk management strategy so that, you know, if it's not the top, or let's say, for instance, in July, it wasn't bottom, was your kind of risk management just going to be to buy more, or was it going to be more of a, I'm not wrong?
Well, I knew I wasn't wrong.
Okay.
You know? And, you know, I've definitely done, you know, I got receipts and videos from well before I even got in, you know, like in June, where I did podcasts and stuff and just kind of told everybody what I was thinking. But my strategy was always like, when I get in, right, I'm going to be able to buy and sell the way that we just talked about. Yeah. So every day I'm putting more and more space between break even, right? So like for new people getting in, if you're using the range, you know, say you're getting Curaleaf at $17 today. Right now it's $17.20. Okay. Say you get it at $17.20, you buy 2,000 shares. Okay. It goes to 18. You sell 1,000 shares, right? Yeah. So your average is $17.20. You sell 1,000 shares. All right. You just made $800 on that 1,000. You've got another 1,000 sitting. Well, let's say then it drops down to 17, right? Well, then you reload that 1,000. Well, what's your average? Is it 17.20? You know, is it 17.10? I mean, it's going to show 17.10. No, your real average is going to be 16.50 because you just got $1 worth of insurance.
Is because a lot of people always talk about their average. Oh, I don't want to sell here because it'll mess up or I don't want to add here because it'll mess up my average. And it's like, well, if you sold 10 cents higher and you're adding down here, fuck your average. I always say, like, who cares about your average? Yeah. Because I mean, what it shows isn't really it.
Yeah. My average right now on Curaleaf, I'll say it says 1466. Like, I know that shit. I know that shit's not real.
Okay. But playing devil's advocate here. Okay. Playing devil's advocate here. Okay. You're now experienced. You now know how to, you know, you're comfortable trading around the core. But for someone who's, you know, let's say that they're trading Amazon, okay, they're not going to, you know, if I start trading Amazon today and I trade if I go, well, let's call my max position right now, and then tomorrow, I'm not going to know the range yet. The range the range probably, I don't want to say perfectly, but perfectly. Okay, all right, we can use perfectly.
Say it.
Yeah, we can use perfectly. So you're comfortable enough inside your range and your core position. But for someone, let's say someone I used to work at a fund. Even for some of the guys that used to work at the fund, they couldn't trade around a core position. They would fuck up their average almost immediately because they didn't understand the range. So if you don't understand the range, can you really trade around the core that well?
Well, I mean, you're going to get into stocks where you don't know the range unless you've been stalking them for a little while, and then you're not participating, but you're watching. And look, that's the leap that you have to take. But also, the reason I'm confident going into these and then trading the range and doing what I'm doing is because there's a fundamental purpose for me to be long, right? There's a reason for me to get back into pot stocks in July. There's a reason for me to buy every dip that I see. I'm not trading dog shit companies. I'm trading companies
that's our job.
There you go. Somebody's got to do it, right? But you guys will always, you guys are going to start, or you guys are already doing it. Don't bullshit me. I know you guys have got some good companies too.
Hey, you guys will grow up soon.
How old are you guys? How old are you guys?
26.
22.
Fuck you guys. You guys still have metabolisms. I eat I'm fucking married. Fucking in your 20s, man. Fucking jealous.
Do you want to start any weed company, or are you just the weed stock guy?
Dude, the crazy thing is I have investments throughout the space.
You basically, yeah.
Oh, so you're rich. You're rich.
Rich. I own edibles companies. I own percentages in funds. I own parts of collectives that have 15 licenses. I'm a founder of a magic mushroom company. I own some fucking crazy shit.
So any city I go to, if I need to get a dispensary, I can just say, yo, I know Jason.
Dude, just say you're my cousin. Say you're my cousin. I swear to God, say you're my cousin.
All right, I'll give it a shot.
Yo, company.
I've never even smoked weed, but this is making me want to smoke weed.
Yeah,
I'm an advocate, so.
Okay.
Just say you're my cousin.
Okay.
So touching on, we were talking about the range a lot. Where are we now on the range, on the broad spectrum of pot stocks? Obviously Biden just got into office. He's a huge, the administration is a huge candidate to legalize marijuana federally. Is this just the beginning for the sector, or are we really starting to look for? So you touched on the pullback. Is it a pullback to launch, or is it a pullback to dwindle down?
There's going to be a pullback, and like I tell everybody, because every couple of months I talk a bunch of people off the ledge. And then I tell them, I'm like, look, in 2 months, you're going to be talking to the next group of people, and you're going to be talking them off the ledge, because it happened in August. It happened in October, October 28th. And then it just happened recently after this GameStop thing. And every time, I always say BTDYP, buy the dip, you pussy. These are viable dips. So you got to look at it like this. So one of my friends was like, this market's really hot. I'm going to and this is when all this shit was going on with GameStop. He's like, I'm just going to get out of pot stocks. He's like, I'm killing it. He's like, they're dipping. He's like, I don't care if I miss the top. And I was like, dude, one, you're going to miss the middle, if anything. You're not going to miss the top. And I was like, why? I was like, I'm the fucking guy, I'm fucking Wu-Tang Financial. Trust me. And so this is what I'd say, right? Everybody's watching the Canadian companies rip, right? And let's talk about multiples here. So my biggest position is Curaleaf, not because I necessarily think that they are the end all be all, which they are, but it's a slower moving stock. So it gives me time to dump profit from other trades into it and then play with the range a lot more. Yeah. So Curaleaf and Canopy, that's what we're going to compare. Canopy, I don't even know what the price is, like $50. Okay. That multiple is like 22. All right. They did this quarter, they lost $2.43 a share, like minus 35 cents EPS or whatever. Mm-hmm. And their revenue went up 23%, like great, right? Their margin was still minus, I don't know. Last quarter was minus 66%, to give you an idea. Oh, minus 23%, sorry. They did 100, and I'm going to use last quarter because Curaleafs aren't out, but it's going to be similar. They did $105 million less than Curaleaf in revenue. Okay. Curaleaf trades at a multiple of 6. Okay. They have a gross margin of 66% positive. They're planting flags all over the United States. They're going to be the biggest beneficiaries of New Jersey and New York when it happens. They have a big position in Florida. But the thing that everybody misses, okay, a couple of things actually. Fucking population in Canada is 34 million. California has more people. Okay, Colorado has a population of 4 million people, 4.4 million people. They did $1.9 billion in cannabis revenue last year. That's more than all of Canada. Canada does not have their shit together. And everybody thinks, oh, well, you know, once it legalizes, Canopy is just going to come here. Well, why do you think there's no fucking US companies in Canada? And do you think that we're just going to be like, yeah, Canopy, come on down. Come on down. Yeah, like there's plenty to go around. I mean, there is, but I think we're going to be a little bit of protectionists here. But at the end of the day, it comes down to addressable market. Yeah. Okay. US has 10 times the population of Canada. Canopy has also recorded a loss of like 800 million in write-downs and shit. Their CEO says, oh, they expect to be profitable in 2022. That shit was supposed to happen in 2018. All right. So you see, there is a huge disconnect. You know, like Tim Seymour called me this morning, and the first thing out of his mouth is like, what the F is going on? I'm like, dude, it's the multiple. But the thing that we agree on is there's going to be equilibrium. The only reason Canopy is trading where it's trading in Aphria and Tilray is because institutions and hedge funds can't buy the US MSOs. I mean, you know, working at a fund, they're not going to let you buy OTC companies. No. You know, these are dual listed. Yeah. So what happens, you know, because look, retail investors are idiots. You know, pot stock investors are probably some of the fucking dumbest people in the world. You know, not my followers, but most of them. So at some point, that multiple flips, you know? Mm-hmm. So you got Canopy up here, Curaleaf down here. It's going to go like this, or at least it gets here. I mean, look, Tilray and Aphria, there's a 50% arbitrage there. Like, what happens first? Does Aphria come up, or does Tilray go down? Tilray is dog shit. Dog shit. You know? Like Sundial. Dog shit.
Yeah, I was just gonna say SNDL is trending on Twitter right now, or at least it was an hour ago.
Yeah, I saw. You know, and like I say, I'm like, yo, make money. Like, I don't care, but just understand, like, you're playing musical chairs at this point. Except the musical chairs, you got to stick a dynamite under you.
Okay.
You know?
Yeah. So question: does that mean that if you think the company's dog shit? I know you talked about buying puts and that you like shorting some of the some of the bigger bullshit names like, you know, Tilray and stuff like that. Do you think that what we'll see is, I know you talked about equilibrium and stuff like that. Do you think that we'll see companies like Sundial and Tilray really just go, completely obsolete and that it'll just become more of a conglomerate between, the bigger players? Or do you think that, because I know that, obviously the weed market's a huge market, but, would you play the upside? I'm going to assume that after the pullback, there will be some upside inside the shit names, or you just stay away from those.
No, I'll definitely trade them, but I'm not being greedy. I'm not like, I'm going to buy this for $1 and I need $2. I'm happy if I get 30 cents, because I'm not going to sweat it, because you can be in any one of those names and just, they do an offering, and that's what's going to happen. Look, sundial's crap, but you can make money on the crap. I understand that I definitely have a bias against Canada, and rightly so, but I'm also self-aware, and, I'm not going to let that bias get in the way of me making money. I wanted to short Tilray 3 days ago. And if I did, and, I said to people, I'm like, if you shorted here, you're right, but the market can remain stupid and you don't go against the high. So, I'm not going to let it get in the way of my trade. But at the same time, I'm also like, these things are getting too high, where I'm like, okay, now it's making the risk on a put less and less. And I think I can get paid because, the psychology of the market is going to dictate, look, people are going to take profit, and everybody has a really short attention span in this market. So they move from one thing to the next. I went, I went short GameStop 250 last week with puts. So I went $95 March 5th puts, and I knew like how dangerous it was. And those contracts were like $3,100 for one contract.
Yeah, they're super expensive.
But everybody was talking about silver. I was seeing press releases like, is this the next Wall Street Bets thing? It was like AMC, NAKD, Nokia, BlackBerry, all the shit. And I'm like, and I saw the same thing in 2014 with the pot stocks. And I'm like, you've got to focus your attention on one name. You can't be spread out amongst 3 different names, because the only reason it's doing what it's doing is because everybody is keeping the pressure. And once Melvin Capital covered, I'm like, all these people are playing against each other. Yeah.
So, and then one of the last questions, and then Dan, if you have anything else, and then we can wrap it up. But with the outside puts, some of these weed names, and even like GME, you were talking about that the put itself was 3,100 a contract. We were seeing vol that was incredible. I think I saw some vol over 1,000 a contract. I'm looking at the Tilray puts right now. I'm looking at the March 12s. You didn't mention which ones you had, but I mean, the vol on them is, I'm looking at 300% for a month out. Does that play into any of your strategy, or is it at this point, it's like, Tilray is overvalued, so I'm going to buy a put. That's my max loss. And that's kind of how you go about it?
No, you definitely have to manage it, because that you're paying premium. So the first thing you do is you take the first move in the direction that you're gunning for. So I had the March 19th $50 put. Okay. And I got in it at $9.10 a contract. So $910 per contract. And I sold my first one at $11.40. Or I sold 2/3 of them at $11.30.
Wow. Okay.
Just to kind of like, because it's still an expensive contract. And I know, because the nature of like, when there's this much premium in it, they want to chop as much premium off. Yeah. Right. So I'm like, that first move is when you're going to get paid the most. Same thing. Like if you buy like contracts at 9:30, you're gonna get your best payout between 9:30 and 10. The rest of the day, it's just bleeding out. So your strategy with that is like, so I didn't get many. I got 10 contracts, and I was like happy getting rid of 7 and then just peeling off the rest. Okay. But that makes sense. You take the bulk profit. That way you can keep the remainder and stay long. Yeah. No,
that definitely makes sense. So with these like Tilray and stuff, we talked about the hot market. will you go short Tilray? Because it's sitting at 59 right now. Will you go short Tilray, or it's just the put and or the 3 contracts that you have left, and it's more about being risk adverse?
Oh no, I'm out now. But
you're out now. Okay.
Yeah. Now that you're talking to me, I mean, I made 36% on.
Yeah, right? And with the premium and the, I mean, I'm looking at the vol on those. Those were 335 on the, and I mean that's expensive.
And let me look at them now. I'll tell you. So check this out. This is where I bought them. Like this price is where I bought them at 59.5. Okay. Now the contract is 735 by 775.
Okay. Yeah, that's what I'm looking at. Yeah. Okay. Wow. That's crazy. That's what we were seeing with GME too. I would feel comfortable rebuying this here. Yeah.
Because honestly, I'm going into it with $5 of insurance.
Yeah.
You know?
Yeah. So. Yeah, that's awesome. I really like the way that you trade around the core, because for me especially, I know Dan actually trades around the core. That's his entire strategy. But for me, I'm completely, I swing stuff for 6 weeks is kind of like my key area is like 6 weeks out. And that's, and that's, so it's interesting to see to see a different perspective on that. I try and, I take off like half once it hits my price target. But it's really interesting to hear, trading.
Yeah. With options, your whole thing is take profit, it can run, and, take profit with the anticipation that you're going to get back in. And then so now, I might go another week out. So I would go February 24th and maybe pay the same price as where I exited, So it's less risk, more time. And I'm already going in having a bunch of profit to keep me cool,
Yeah, that definitely makes sense.
All right. Well, to wrap up, before I just give you the floor for anything you want to promote, any self-help book you may have coming out or autobiography, any other crazy story? I know that the Tim Sykes one almost came out of nowhere, and that one was wild in itself. It looks like you're pulling out a notepad. Let's see which one's podcast acceptable.
It's Jason, Supreme from Wu-Tang. Give me a call. I want to invest in some penny stocks and medical marijuana. Advice from me or some direction. 818.
So did you catch that?
Who was that at the very beginning? I heard Wu-Tang.
It's you got from Wu-Tang.
Holy shit, that's crazy.
So the Iron Sheik, and I'm like, man, is this a top? So you guys know, you guys are too young to know who the Iron Sheik is, but WWF, when I was a kid, he was one of the big villains, with Hulk Hogan.
Yeah, a lot of.
And this guy's, and he's sending me messages yo, he's what do you think about this company? He's asking me about pot stocks. You'd be shocked at the people that ask me, yeah. One of my best friends is he's on the show Billions, and I'm like,
it is awesome just because
I love
every day, especially with this whole GME and AMC stuff going on, it's another crazy person will DM you and you're like, damn, I got one from Murda Beats, the guy that made the beat to the Kiki, do you love me? And I'm like, holy shit, dude. I didn't say, I was like, I love that song. But I was like, yeah.
What do you call it? Mia Khalifa was trading around the core of Tesla. I was like, I can't believe it. I can't believe it.
Yeah.
I was like, if she's trading around the core, man, I gotta step on my game.
But
I don't have anything to promote. The only thing that I'll promote is, nobody goes broke taking profit. And, especially for you younger guys, it's a long game. You want to be able to do this and do it well. And you want to sock up as much cash as possible until 2023 and really have your craft down to a science, whether you're trading options, pot stocks, or whatever. Because when interest rates go down, market's going to take a shit, and it's going to look a lot like the market did from in October of 2018, October 22nd to December 24th.
Hey, that's when I got screwed. I was in stats class losing my shirt on IGC.
India Global
Yeah, on IGC and yeah.
Oh my God, that's the biggest scam company in the world. That guy, fuck.
I lost my net worth on that in during that time.
Sorry, I was making a trade real quick. All right, man. Well, thank you so much for having on. No weed. But yeah, thank you so much for coming on, man. It's been a blast. Love your Twitter. Everyone, make sure you go follow him, Wolf of Weed Street, and take care, dude.
Later, guys.
Thank you.
I've been getting a lot of questions on, how we started, how, I started or how I trade. And I'm sure you get them a lot too, seeing as, you're a 22-year-old multimillionaire and I lived in the swamp just a year ago. So, it's kind of crazy. I mean, we weren't just always rich, handsome, and awesome our whole life.
We were just always handsome and awesome.
Yeah. The money came later. But I mean, I'll kind of start out and, give my little 5-minute story, 8-minute story. Then you can. And then, if we have any questions for each other, see how well we know each other, we can kind of get it. Okay. So I kind of started in 2019, in the middle of it. I was around 24 and I bought a little Bitcoin. It was around $60 worth, and I checked it back around 3 months later and it was now $30 worth. And I was just amused by how I lost 50%. And I was like, wow, I should start investing. So I bought the Bitcoin on Cash App and I was just going to do the same thing. And I literally started day trading on Cash App with like the 30 stocks that had available and like partial shares of Amazon. It was ridiculous. It made no sense. And I went down the same rabbit hole that all other kind of new traders, go down. I downloaded stock twits and I Googled what stocks to buy, and I found them and they weren't on Cash App. So I had to download Robinhood. After downloading Robinhood, I found the Discords and the Twitters, and I found Buy Sell Shorts Room. And then I found Atlas, and in Buy Sell Shorts Room is actually where I met Hugh. We were talking about GHSI. I actually asked him his price target of GHSI in a private message. That was like my introduction. Following that, and here I'll actually get into the whole why BSS has me blocked. It is like a whole fiasco with Stan in there as well. I kind of like rode off and started my own chat room. I'd been trading for about like 5 months at this point. This is when coronavirus had started. It's like April, May. I've been trading pretty heavily for around 5 months now. I just got fired from my job for just trading at work and losing money all day and not doing my job. And so I made my own little room and we were kind of poaching some people, and BSS got pissed. And Stan kind of flipped the whole thing on me. Next thing I know, I'm blocked, and there goes my ties with BSS. But as things went on, I kind of made a Twitter account, and that's where I kind of started doing the silly skits and everything that people kind of know me by now. But by this time, my account that I initially had put $2,000 in or $4,000 in around, let's say, October of 2019. By the time March came around and all the markets were halting, I was at $2,000. And whenever I got fired from my job, I withdrew like $1,000. Or before I got fired from my job, I withdrew $1,000, and I was like, okay, maybe this isn't for me. Maybe I should stop losing all my money. I literally got fired the next week, so I deposited all that money back. I was like, damn, I need to make money again. So I put all the money in, and I just started trading away. And lucky for me, it was like a really easy market. Let's just put it how it is. I mean, like everything was running 100%. The penny stocks were hot, and that's also how I kind of learned, my strategy of spreading out my plays, because if an offering hit, things would drop 20%. If a PR hit, it would run 150%. So I was like, okay, math checks out. I'll just be in a shit ton. And then I learned like my scalping method off of the stock Mark, M-A-R-K. It used to go from 36 cents to 40 cents every day off of like a tweet by the company or Mark Holdings. And I kind of just learned, okay, in and out, in and out, in and out. that's kind of how my whole strategy developed. I would just swing these things, do my whole in and out thing until the PR came, and I would just learn their personalities and range. And by that time, I was still learning, and I thought, there were so many things I was learning from other people that we could just put into a podcast. Because at this point, people are asking me questions, and I was like, damn, I don't even know. But yeah, I mean, I think that kind of sums up like the trading thing. Obviously, the account, by the time we started the podcast, it was around 60,000. Because that 2,000, whenever it was in March after the huge dip and everything, it exploded. Everything was running. I compounded as well as I could. And I mean, I went from 5K to 25K in a month. I mean, that PDT was just smoked. Stayed on a cash account the whole time. Didn't, I tried my best to know whenever I hit PDT, I knew exactly how I was going to trade. And I just continued trading that way. And now I have a couple accounts. One is comfortably over six figures and one is nearing the six figures. So yeah, I mean, it's wild what it can all become, especially thinking just a year ago exactly, it was probably a $2,000 account. So that's me.
That's incredible, dude. That's really awesome. I mean, now you're just having incredible days. You're just maximizing that account. That's really awesome.
Thank you. And you obviously went a little different routes, starting in like 16 and learning fundamentals and charts and not just rocket emojis. So I know it's been a while since you told that one.
Yeah. So when I started, it was because I had a heart condition. And at that time, I really couldn't play many sports. I mean, like I would pass out in like the first, and anyone from high school, I would pass out inside the first quarter of the football game. So I realized quickly that, I was not going to be JJY. I also was like 5'9", maybe 5'10", you know what I mean? But so that really didn't, that wasn't going to bode well for the long term. So my cousin, was dating a fund manager who's now one of my best friends. And he was just trying to, kiss up to me and be nice to the little cousin. And he ended up giving me 2 books and I read them that weekend. It was Christmas Eve. I read them like 2014 or 2013. And I read them, that weekend and I fell in love. And I just basically took that passion that I had for sports and, transitioned that into, stocks. And in the beginning, oh my gosh, I had a $7,000 account, and one of the worst things that I used to say is one of the worst things that happened to me was I made money on my first trade. And that was the worst thing ever. Cause I thought that this was, I thought I would be a billionaire by 19. So that was one of the worst things that ever happened to me. Well, looking back, it's probably one of the best things that ever happened to me, because from there, I blew up the $7,000, which at that time was everything to me. There's no daddy's money here. It's working 2 jobs and going to school. So that's how it started. And then I continuously lost money for the next year and a half. And basically what would happen is that, I would work 2 jobs or 3 jobs during the summer, and that would go into my bank or, the TD account and, effectively write out within a few weeks. So technically speaking, I've blown up once, but, if I didn't have, the continuous money coming into the TD Ameritrade account, it'd probably be like 15 or 16 times. So that's how it started. And then I basically took a year and a half and just started to understand what doesn't move, what doesn't work. It's so funny because the barrier to entry into the market, looking back, it seems like nothing. When you're looking back, the only thing that at that time, I was like, oh man, if I can figure out how to use this broker, TD Ameritrade, Thinkorswim, I'm gonna kill it. And little did I know that using the broker is just the first pebble in the in the rock, in the quarry. So from there, like I said, I continued to lose money for the next year and a half, 2 years. And then I came across, I had a Twitter at that time, and I was posting ideas and started gaining a little traction. And then I joined BSS's room, and BSS was able to teach me about, some of accounting and some things to look for inside stocks that, and he really helped me with some of my DD. And then from there, I had found PJ Atlas, and I had made the transition over to there, where Bob was really instrumental. Zach was really instrumental in my process, because at that time I was still doing about, once I became profitable, I really never looked back. Everyone has some bumps on the road, but from there, I've been able to have 1,000% years every year since. So that being said, from there, I was able to really maximize. But the issue that I'd run into before I had met PJ, Zach, and Bob was that I had an issue with scaling. At that time, 6 figures had been incredible money to me. So, I had never even thought about 7 figures. I'd never even ventured down that path. So, they had really helped me with scaling and understanding, how you really can kill this on a deeper level, on the next level. And, obviously we see them just destroying any means of what wealthy is. And so they were really instrumental in getting me to the next step. And then, I started to, be a bigger influence on Twitter, by, trying to give back and just help people. And that's where, Dan and I kind of, started to interact when I, started to try and give back. Because one of the things that I think, we don't talk enough about is that
he was like, Dan really needed some help, so giving back to this kid.
No, I think it was I got a GHSI price target question every day for like a week.
Yeah, I had like half my account in it, bro. if I had half my account in TRCH, you'd be getting the same amount of TRs.
Yeah, so I think that's kind of, and because I wanted to give back, because I understood that that I and even to this day, I think one of the things that has helped me most is understanding that I understand that I know nothing. And what I mean by that is that I understand that I know the tip of the iceberg, but underneath the water, or, the sea level, there's 1,000 feet deep of the iceberg. And so that has really helped me. But I wanted to also be able to share what I had already known, because I really hadn't copied a certain trader. It was a mix of all the different traders. I had started learning about arbitrage, and I had started learning, about day trading and swing trading. And so I had taken a little bit of everything that I had learned and created my own system and what worked for me. And so I wanted to be able to help anyone that I possibly could, with the understanding that, I also know nothing, if that makes sense. And so then I met Dan. Dan and I started talking frequently. And how did we start the podcast? You want to talk about that?
Yeah, I said in Trader Chat one day, whenever Hugh was just talking there, I was like, man, we should start a podcast. And I was like, I just don't know if Hugh's got time. And he was like, yeah, I got time. And I was like, okay, let's do it. And, so we just hopped on like an app and recorded our very first one. And that's why it sounds so bad. And then we were like, okay, we should get someone to help with this. And that's where Vinny kind of started editing all of them. And no, I mean, we took like a 3-week break on one. Didn't even know if we'd come back, but we got so many requests after, those first 10 episodes that we just had to. And man, how crazy. I mean, an advertising spot on the podcast now is more than 2 weeks at my last job.
Wow, that's incredible. Yeah, it's really funny to see where we've come from. I hadn't had my first, and it's crazy to think about. I hadn't had my first soda at a yeah. My first soda at a restaurant, because that's how I'd always grown up, to be to value the dollar so extensively. And so the first time that I had a soda out at a restaurant, I was like, whoa, I'm like, is this like what rich people do? And so it's incredible that to see how far we've really come.
Yeah, no, I mean, it is fun, especially seeing like, I mean, you're so young and you're so rich, and it's crazy. You still spend all this time giving back, which is super awesome. Super happy to do this with you. And I would want no other Furu on Twitter to be my Valentine, except maybe Zach.
Well, All right,
finance is finance. I mean, this is a financial podcast, dude. We're all about financial incentives.
Yeah. No, dude, this has been a great time, and I really feel like we're just starting to step into our own, and I can't wait to see where we are next Valentine's.
For sure, yeah, married. But one thing we are thinking about bringing back. I know these past 2 weeks have been crazy because of like the 3-day weekends and all the traveling, and we've just been in a little rambunctious situation. But one thing we do want to bring back, going forward, is the midweek episodes, make them permanent. And one thing I have an idea: trader interviews for midweek episodes. The Ripsters, the Ultras, we get the Zacks. Well, Zach and Pete, we may have some that deserve a Sunday episode. But, getting those traders on, because everyone likes to hear traders, hear their stories, how they made it, how they learned, how they got better, and their insights. So we're going to try our best to get those back there for you. I know you actually just got to were you done with your story?
Yeah, no, I was done with basically,
okay.
Sum it up, heart condition, stocks, lost a lot, started to not lose as much, and Dan.
Wow, congrats, dude. All culminated to that final event, Dan. Congrats, Dan. But yeah, no, we hope we can start bringing back these Wednesday episodes. Let us know who you want us to have on. We'll try and schedule up some things to happen. Maybe even record something on Monday for President's Day and have it out on Wednesday if you're lucky. So, yeah, guys, make sure to rate 5 stars, give us a subscription, a like, and all that good stuff. And if you're not following us on Twitter, if you happen to discover us through the podcasting app, we are there. I am Dip Deity on Twitter, and he is Hugh _Henney. And we'll see you next time.